Hello, and welcome back to another episode of Market Brief After Hours. It has been a whirlwind of a week, and just when we thought we had the narrative figured out, the script got flipped again on Wednesday. We went from looming trade wars to a sudden diplomatic breakthrough, and Wall Street certainly liked what it heard.
It really was a textbook relief rally. The market had been on edge, pricing in a sell America scenario, and then, almost in an instant, the tension evaporated. The headline, of course, is President Trump abandoning those tariff threats against European allies regarding the Greenland acquisition.
It is fascinating how quickly sentiment can pivot on geopolitical headlines. So let's get right into the numbers. It looked like a sea of green across the U.S. boards.
It certainly was. We saw a significant recovery. The S&P 500 managed to reclaim some serious ground, driven largely by investors rushing back into growth stocks. The index gained 1.16% to close at 6,876. That's a gain of roughly 79 points. It was really the tech giants like NVIDIA and AMD doing the heavy lifting there, helping the index bounce back from what was shaping up to be its worst performance since October.
And the Dow Jones? That seemed to benefit the most from the trade news.
Exactly. The Dow Jones Industrial Average surged. It jumped about 589 points, or 1.21%, to finish at 49,007. This was a direct response to the White House canceling those scheduled tariffs on European goods. When you remove a trade barrier, the blue chips usually breathe the biggest sigh of relief.
And rounding out the majors, we had the NASDAQ.
The NASDAQ composite wasn't left behind. It climbed 1.18%, adding about 271 points to settle at 23,225. So across the board, we saw gains of over 1%. However, it is worth noting that despite this Wednesday rebound, the major benchmarks are still under pressure for the week. The S&P is still tracking for a 1% weekly decline, and the Dow is looking at a 0.6% loss. We aren't out of the woods yet, but the bleeding stopped.
Let's hop across the Atlantic. With the tariff threat removed, you would expect Europe to be celebrating, but the reaction there seemed a bit more muted.
Muted is the right word. It was a mixed bag. The Pan-European Stoxx 600 ended virtually flat. It recovered from earlier lows, sure, but it didn't skyrocket. The issue in Europe right now is that they are balancing this positive trade news against some tricky domestic inflation data.
Specifically in the UK, right?
Precisely. London's FTSE 100 edged up just 0.11% to 10,138. It got some help from the basic resources sector. Anglo American and Rio Tinto were up around 4.6% and 5% respectively, but the mood was dampened by December's inflation data. UK inflation rose to 3.4%, which exceeded the 3.3% forecast. That is the kind of number that makes traders nervous about delayed interest rate cuts.
And looking at the rest of the continent?
Not great. The DAX in Frankfurt fell 0.45% to 24,592, and the FTSE MIB in Milan dropped 0.44% to 44,515. Even the Swiss SMI saw a marginal decline. So while the trade war risk receded, the internal economic pressures in Europe are keeping a lid on enthusiasm.
Before we move to commodities, let's quickly touch on Asia. It seemed like they were reacting to yesterday's news rather than today's.
That's often the case due to the time zones. Asian markets face downward pressure. Japan's Nikkei 225 fell 0.41% to 52775. That marks 5 straight days of losses there. The bond market volatility in Japan is triggering a sell-off in financial stocks. We saw Mitsubishi UFJ and Sumitomo Mitsui dropping over 3.5%.
But it wasn't all red in the region.
No, South Korea's Kospi managed a 0.49% gain to 49110, largely thanks to a massive 70.2% surge in semiconductor exports. That is a staggering number. And down in Australia, the ASX 200 dipped slightly, but mining stocks hit record highs. So it is very sector-specific in Asia right now.
Let's look at the bond market. With the Sell America narrative losing steam, did we see a move back into treasuries?
We did. Yields retreated as the fear subsided. The 10-year Treasury yield declined by more than 4 basis points to settle at 4.251%. It had peaked above 4.3% in the previous session. The 30-year bond yield also saw a significant drop of 5 basis points to 4.87%. Essentially, the immediate geopolitical panic faded, so the volatility in the bond market cooled off.
And speaking of volatility, energy markets are looking interesting. Oil is up, but so is natural gas.
It's a supply-side story there. Crude oil edged higher. Brent futures rose 0.57% to $65.29, and WTI climbed 0.56% to $60.70. This wasn't really about demand, it was about disruption. We have output halts at Kazakhstan's Tengiz and Korolev fields due to power issues, plus logistical bottlenecks in the Black Sea. That kept a floor under prices despite U.S. inventory builds.
And natural gas?
That is the big mover. U.S. natural gas prices rose more than 24% to a 6-week high. Consequently, natural gas-producing stocks rallied for a second day. It is a very volatile corner of the market right now.
We are going to take a very short break. When we come back, we are going to dive deep into the Forex markets. I know many of you are watching those technical levels closely. And we'll wrap up with the big individual stock movers of the day. Stay with us. Welcome back to Market Brief After Hours. We've covered the equities and the commodities, but now I want to get into the foreign exchange markets. There is a lot of technical action happening there, especially with the moving averages. Let's start with the euro against the dollar.
The euro-USD there pulled back a bit, finishing the session at 1.1688, down 0.31%. It is in a very tight spot technically. The price is sitting just above the 50-day moving average, which is at 1.1661. However, it is struggling to get over the 100-day moving average at 1.1663.
That is a very narrow channel.
Extremely. Traders are watching that 1.1670 level as immediate support. If it breaks below that, we could see a test of the 200-day moving average at 1.1589. On the flip side, if it can break the daily peak of 1.1743, that would signal renewed bullish momentum. But right now, it's stuck in traffic.
What about the British pound?
GBP USD is consolidating. It closed at 1.3426, down slightly. The key here is the 200-day moving average at 1.3407. The pair is hovering just above it. The candle formation showed a noticeable lower wick, which suggests buyers are stepping in to defend that 1.3400 level.
So the long-term trend is still holding.
For now, yes. The trend is characterized by higher lows. But a sustained break below that 200-day average could shift the bias down toward the 100-day average at 1.3363. Immediate resistance is at 1.3458.
Let's look at the Swiss franc. We saw a sharp rebound there.
A very sharp rebound. USD CHF gained 0.71% to end at 0.7952. We saw a strong green candle with a long lower wick, indicating a rejection of lower prices. However, the pair is capped by a cluster of moving averages. You have the 50-day at 0.7981 and the 100-day at 0.7980, acting as a ceiling.
And the Aussie dollar? I heard it hit a milestone.
It did. The AUD-USD hit a 15-month high. It closed at 0.6762, up 0.38%. This is the strongest chart of the bunch. You have a bullish alignment of all major moving averages. The 50-day is at 0.6621 and the 200-day is at 0.6535, both sloping upwards. It is a robust uptrend. If it closes above the session high of 0.6778, we are looking at new cyclical highs.
Moving from currencies to precious metals. Gold just keeps going, doesn't it?
It is relentless. Gold powered to a fresh record high of $4,825, gaining 1.31%. It is acting as the premier safe haven. The technicals are incredibly bullish. The 50-day moving average is way down at $4,316. We are in blue sky territory here. Immediate resistance is the all-time high of $4,888. A break above that targets $4,950.
Silver, however, didn't have the same luck today.
No, silver took a breather. It pulled back sharply, losing 2.16% to close at $92.52. It looks like profit-taking after a parabolic ascent. But don't panic if you are holding silver. The long-term structure is still overwhelmingly bullish. The price is well above the 50-day average of $66.12. This looks like a healthy correction within a massive uptrend, provided buyers defend the $90.38 support level.
Finally, let's wrap up with the individual market movers. Who were the winners and losers on Wednesday?
Let's start with the winners. Lucid Group had a great day, surging 18%. They announced a collaboration with Rockwell Automation for their Saudi Arabian production facility, and the market loved it.
Earnings reports are still trickling in too.
Correct. Teledyne Technologies rose over 9% after beating sales estimates, reporting $1.61 billion versus the expected $1.57 billion. And Progressive Software rallied more than 10% on very strong full-year guidance.
And on the energy side?
As we mentioned with the commodity prices, the producers followed suit.
EQT Corp rose 6%, and Expand Energy and Antero Resources both added more than 4% as natural gas prices spiked.
But it wasn't good news for everyone. Kraft Heinz took a hit.
That was a significant drop. Shares fell more than 5%. It was triggered by a regulatory filing showing that Berkshire Hathaway registered over 325 million shares for a potential future sale. When Warren Buffett's conglomerate signals a potential exit, investors tend to get jittery.
Understandably so. It really highlights how sensitive the market is to both geopolitical macro news and specific corporate maneuvers.
Absolutely. The rapid reversal we saw Wednesday shows that trade rhetoric is still a major driver. But looking ahead, traders are going to be shifting focus to the resilience of corporate earnings and, crucially, the Supreme Court deliberations on Federal Reserve independence. That is the next big macro story to watch.
We will certainly be keeping an eye on that. That brings us to the end of today's deep dive. If you find this useful, please follow Market Brief After Hours on your preferred podcast platform so you never miss an update. Thanks for listening, and we'll catch you at the next close.